What, in your eyes, is poor risk management?
Well, risk management is going to come down to the initial risk someone takes on a trade. So poor risk management would be, I would say, anything above risking 2-3% on a trade. Most traders shouldn't be going there. And also, we've talked about it before, doubling up. So where you're just adding to losing trades, that's just really risk management. So good quality risk management is a trader who is risking just a small amount. They add to their position once it goes in their favor and then start building the position. But that's good quality risk management. Poor risk management is more like gambling.
Okay, I've got a statement here, Charlie. It says, you once said, we've seen plenty of traders over the years make huge returns on their accounts, well over 1,000% in a relatively short period of time. But as soon as they hit a drawdown period, they just as quickly give it all back. This is because they were trading well beyond risk limits in the first place. So how should traders handle drawdowns?
Yeah, coming to the first part, you do get traders who can have a lucky streak and can make a huge percentage returns. So that's the first part of the statement. So you don't normally get people make 1,000% returns in a very quick period without potentially giving it back if they don't know what they're doing. But as a side note, how does a trader deal with drawdowns? That's another factor. And one thing that I always say to traders is that everyone goes through drawdown periods. You go through phases when the trading style that you have just, for whatever reason, isn't really clicking with the market cycle that's there at the time. So you might be, a drawdown for a day trader could be a few weeks. For a swing trader, it could be a month or two. So how do you actually deal with that? What I always say is once you recognize your account's dropped off a certain amount, is to just start reducing your position size. So you still trade, but you downsize. Out and out, because you don't know when you're going to come back into, your style's going to come back into profitability again. But massively downsize once you get to that drawdown point. So let's say, for example, you've 10% drawdown and you must still stay in the game. And so the best thing, don't get me wrong, if you need to clear your head and take a week off, there's nothing wrong with that. But outside of that, you massively downsize your positions. And this is where a lot of traders go wrong. When they're 10% down, they want to double up and make back their losses as quickly as possible. It's completely the wrong thinking, because if they do that and then they still lose again, then all of a sudden a 10% drawdown becomes a 20 or 30% drawdown, and then it's a lot harder to come back. So minimize the position size, move it right down. It helps you get your confidence back in your strategy. And then as you see that starting to make some money, then and your account starts coming up a bit, then you can start increasing your position as your account starts coming back up.